We've got Indrajit Mookerjee, the chairman, joining in on the show right now. Mr. Mookerjee, great to have you today on 18 Hour. Thank you so much for joining in. You know, the last time we were chatting with you, you said that you're going to be targeting a 30% growth for FY25 and 26. How's the trajectory looking to you? Are you at par for delivering those numbers?
I think so. I think we are even doing better than the target. If you have seen the last half-yearly results, which has been one of the best that we have turned out so far, we have clocked much more than 30%. Of course, you have to look at the consolidated results of us because we, as you know, that the growth has come in combinations of organic growth from our plants in Calcutta, as well as an acquisition that we have made in Gujarat. So altogether, I think we have shown a growth which is in line with our expectations. In fact, more than our expectation.
All right. Morning, Mr. Mookerjee. What about your EBITDA margins? They're around 11%. Can we see an expansion, especially with the growing share of the private sector export orders? And if
I,
so, where do you see
I,
margins? Yeah.
Good morning. And I must also tell you a positive answer to that because our EBITDA margins have been going up, and end of the quarter we would show even a better EBITDA margin. I'm expecting another 100 to 150 points to go up in the quarter that we are on, and it's arising out of various factors. One, of course, is the product mix. We are moving more onto the private, and we are also going on to the export orders. In addition to that, there is a team which is working on cost reduction, efficiency improvement. So these are all the copybook style actions which are now coming true.
How has the integration of Jindal Rail progressed, and what are the synergies you already have realized in terms of cost and market reach?
Absolutely fantastic. This is the one which has given us a strong pie on the private sector where the price realizations are high, and integrations have gone very well. In fact, I never expected that we will integrate so quickly. It's also giving us tremendous cost synergy because, as you know, that we are one of the making the wagons or the freight cars require a lot of products coming out of the foundry, and we are one of the largest foundry in this segment, already having a capacity of 43,000 or 45,000 tons a year, and we are putting up another one. So that these are the components which are coming from in-house, reducing the cost. So I would say that this is an acquisition where I am personally extremely happy because it's giving us more synergies on the sales as well as on the cost side. Uh, if I can say that this also has led us to uh, set up our first global capability center, which is coming up very strongly in Delhi, which is going to work on the development and designs of new wagons, which are going to be the which are going to be actually the what's going to come up for future, and our group is working very strongly on that. We also have a technical understanding with world's largest wagon manufacturing company from the US. So we're working together for India as well as for the Asian market.
Mr. Mukherjee, could you put a number to that? What is it that you hope to scale up the current production to? Because as we understand, it's around 1,000 wagons per month currently.
I think we have come to a stage. The production depends a lot on what you make. So once you start making specialized wagons, you make less number of wagons, but it takes a longer time to do it. But if I can give a simplistic answer, I am looking at another 15 to 20% increase.
Okay. And there is no slowdown on the railway orders, even though everybody is talking about slowdown in government spending. You've not felt the impact or heat of it.
Yeah, I think we also keep that in the mind because after all, the levels have been so high, and expecting that it will sustain at that level is something which I think is not very practical or pragmatic to think. So therefore, our actions are also in the various other adjacencies of the railway segment. For example, component is a business which we are strongly developing for the export markets as well as for the private sectors. So components for, I mean, for railway wagons. So actually, we are spreading ourselves, because if you really look at it, the wagon is not the biggest pie in the of the railway expenditure. So we do have to move to others, and yet we have to be very careful so that we don't take undue risk. So this is a balancing game that we are playing right at this moment.
Okay, what is the sense that you're getting when it comes to the timeline for setting up the new foundry in Odisha, and what would be the revenue potential from the same?
Well, that foundry is going to be, first, I must tell you, there is going to be an export-oriented foundry mostly, because we have got partners, as you know, our Webtech and another large company from the US. They're very keen because of the geopolitical reasons of China's supplies to the US has become either very expensive or dwindling. So, coming back to your answer, I think it will not be correct for me to put a number to it, but I think it's going to be in the range of $100 million.
Okay. And given that right now steel prices are lower, raw material prices are lower, are you in for a margin expansion in the current quarter?
It should help us.
By how
It should
much? By how much, sir? What could be the quantum?
it won't be because after all the reduction is not that great. So to the extent, if it reduces by, let's say, 10, then we should be able to get 20-25% of that.
Okay.
That's great. The other thing we wanted to understand, Mr. Mookerjee, was also about the real estate development and the enabling resolution for that. Tell me, how does that fit into your, your strategic goals at Texmaco?
See, I must tell you that we are a part of a large group, which is the Advent Group, and Advent Group have lots of footprints in the real estate through other companies. But Texmaco also do have some real estate which is very prime, and which we are not going to use for our production purposes. So we are in a process of structuring and finalizing our scheme for development, which is in area of Calcutta. But the places where we are operating are really lucrative from the real estate segment. So we want to extract the value out of it. So answering your question very directly, I think it's in very by this financial year we'll come out something with a very concrete plan.
Okay. Uh, where is this real estate parcel of yours? Because I know Texmaco is sitting on real estate, and these stories keep on coming that they want to turn the land bank into a gold bank now. Is there any update there? I mean, are you looking at joint development?
Our priority is to play in the rail segment. So we are going to be in the rail segment. We are going to be manufacturing wagons and foundry and components, etc. We only will use that part of the real estate which we think in our 5-year plan is not going to figure out. So I don't think we will convert from a manufacturing company to a real estate company. No, it's nowhere there, because we are bringing in tremendous value to the industry. So we are very satisfied the way our plans are keeping on moving. So answering again, it's the part of the real estate which we are not going to use for our manufacturing purposes are near about Calcutta, and those are the areas which are developing. So we decided that we should use that part for, and it's also giving us another benefit, because this has made us to become more efficient by putting everything together instead of a widespread many factories in Calcutta area.
Okay. But this entire view which everyone had that railway capex will slow down, you are dismissing it, right? You don't see any risk to the cycle and to the business.
You see, even if I think one of the things which we all agree, that the current infrastructure development of the country is in which the railway plays a very predominant role. If you look at that, railways and highways, these are playing a very predominant role. Now, railways have a plan very clear up to 2030, and they are so far walking the talk. So I would expect that there won't be phenomenal increase, but they would continue to spend. But at the same time, from our point of view, we are looking at not to put all eggs in one basket. So we are also looking at various other areas where the competencies can bring in synergy. So I wouldn't, 5 years down the road, you may see us doing something which has got some connections with our manufacturing competencies or project competencies. So it will happen like that. But I don't think there's going to be an immediate turndown because there's a plan on which the railway is working.
All right, good to have you on board. Thank you so much for being candid with us, talking about your margin projections, the outlook on your order book, your capex plans, and so much more.
Thank you so much for having me here.
All right, that's the management of Texmaco Rail, organic growth from the Jindal Rail Infra acquisition, and as of now, $100 million revenue potential from the Odisha foundry, and they will look at expanding their margins as well by about 100 to 250 basis points.
If you like this video, then like, share and subscribe to ET Now.